This episode is brought to you by Hasa. Liquid is clearly better. Liquid chlorine is the highest purity, works immediately, has no added cyanuric acid or calcium, and it will leave your pool safe, clean, and clear. And by the Bottom Feeder professional grade battery powered vacuum system. It sucks to clean pools, so cleaning pools sucks less. Get $100 off with code DVB100.
This episode is brought to you by Skimmer, the #1 pool service software in North America. With Skimmer, you can streamline your schedule, grow your revenue, and keep your customers coming back with 5-star service. Whether you're a one-person operation or an established team, Skimmer is your partner in success. Visit getskimmer.com/poolguy to try Skimmer for free for 30 days.
The Pool Guy Podcast Show. The Pool Guy Podcast Show. The Pool Guy Podcast Show.
Hi, and welcome to the Pool Guy Podcast Show. In this episode, I'm going to talk to you about a little bit about a kind of mock pool service. A lot of people ask, can you make money in pool service, and is it a good industry to jump into? And I think it's probably a good idea for me to do like a mock tax return based on a partial pool service route or a part-time route out there to see if it will benefit you to get into the industry. Are you a pool service pro looking to take your business to the next level? Join the Pool Guy Coaching Program. Get expert advice, business tips, exclusive content, and get direct support from me. I'm a 35-year veteran in the industry. Whether you're starting out or scaling up, I've got the tools to help you succeed. Learn more at swimmingpoollearning.com. Now, there are going to be a lot of numbers in this podcast, so stick with it because you're going to get a true sense of kind of a real net income after taxes in the pool service industry. So if you're really thinking about getting into the industry, this is something that you can utilize. And if you're in the industry, of course, you can kind of relate to this and get some ideas for expanding based on some of these numbers that I'm throwing out here that are realistic in one sense, but of course, this is a kind of mock podcast, so they're not real tax return numbers from an actual business. But I think you're going to get a really good sense for the profitability of pool service if done correctly with a good monthly service rate. And of course, with the costs being kept down somewhat, even though you're going to deduct the cost, you can't just go crazy and not worry about the cost of business. It's really difficult to escape paying income taxes on anything, and you're going to have to pay income tax whether you're self-employed or if you work for a company and they take deductions out. So one thing that you really need to know is that the money you report in is going to be taxable depending on different aspects or, factors would be your total tax amount that you're going to get. But there's some ballpark figures I'll throw out here. Nothing is accurate. I'm not a CPA, and these are all just kind of estimates to give you an idea of the profitability of a pool service business and if it's something that you want to jump into. Now, I'm going to say that any service business is pretty profitable because of the deductions you can take off of your total gross income. And I'm going to give you an example here of just some basics. This is going to be based on a 45 pool route, service route, pool service business. So I guess part-time, not quite full-time. You'd have to get it to about 70 pools to be about full-time. So you're just doing 45 pools and you're not doing anything else. You're not doing any repairs or acid washes to keep it simple. And it's just the monthly income. So you're going to charge $185 a month and you have 45 accounts. And that brings you to $99,900 a year, or let's just say $100,000 a year in income. And this is, fairly reasonable in Los Angeles County and other areas to get this kind of income based on a partial route or a smaller pool route, which is like about a 4-day work week here for this pool route and maybe 6 hours a day, I would say, or maybe a little bit less. And it's a pretty good income. And what makes it good is that you're going to deduct a good portion of everything you put into the business. If you want to start with your truck, you can do either the cost or the mileage deduction. And if you do the mileage deduction, I suggest you get an app that tracks the mileage accurately. There's a lot of them out there like Mile IQ, And QuickBooks also tracks your mileage for you. And it's a good way to make sure that you're reporting the mileage accurately if you ever were to get audited. Now, there's a lot of talk about incorporating or being a sole proprietor. If you incorporate, there are some benefits. You have some protections from liability. You also understand that corporations get audited a lot less than individual tax returns. So the odds of getting audited as a corporation are smaller because there's a lot of leeway in corporations as far as write-offs and different ways of reporting. But there's a cost involved, the filing cost of $800 a year. So that's something to consider. But you will have to make a choice of how you're going to file when you start your business. And I would suggest incorporating for the cleanest way to run your business, in my opinion. And you can do that pretty easily with a CPA. You can do it yourself, but I'd rather hire somebody to do it properly because you can file the paperwork incorrectly, which I've known people to do, and then they're in a little bit of trouble at that point. So an LLC is fine. I actually use a C Corp for myself because I do a lot of business out of state as well, so that's why I formed a C Corp. And it's something that you just have to talk to your CPA about what the best way to set up your business. And then you have to decide if you're going to do the mileage or the expense deduction in your vehicle, because you can't switch it once you start one way or the other. So just keep that in mind as well, that if you do the expenses or the mileage, you can't flip-flop and go back and forth. In a lot of cases, especially like in California, the mileage will probably be better than a standard deduction. And just for sake of argument, I'm going to say that you drive 18,000 miles a year, and that's 70 cents a mile. And then the deduction for that will be about 12,600 for 18,000 miles of business miles. Versus if you did the standard deduction, maybe it'll be around 7,500 or 8,000, depending on all the costs associated with your vehicle. And if you drive less miles, you definitely would want to probably do the vehicle expense deduction. So if you had 100,000 gross income, you would take the 12,600 and you would deduct that from there. Let's just say you had some office expenses and you had other expenses that were about 5,500. You could take that off your taxes too. You can do any kind of rents. If you rent anything, you can deduct that as well. Let's just say that your truck was in the shop, you rented a truck for a week, and that costs $1,200 to rent that. And maybe there's some other rental charges in there as well. Your chemical costs, let's just say that you spent $15,000 on chemicals to make it simple. And even if you bill the customers for chemicals, anything like phosphate remover or chlorine or even the acid, you still deduct that as a business expense because you paid for those chemicals, and the income from that is going to be reflected on the income from your pool route. And so all the chemical costs you're going to deduct, regardless if the customer paid for them or if you use those as a maintenance dose for their pool, all those are deducted as well. Any kind of equipment, let's just say that in that $5,500 was some new equipment that you purchased, and you can split that up between office expenses and equipment. That was the number I gave out earlier. And then there's some taxes and licenses that you pay for. Let's say that's $500, and then $300 for other kind of expenses that go along with your business. And, let's just bring that up from $300 to $1,800 just to make it kind of even, covering like insurance and things like that. So altogether, your total expenses is $36,600, and your net profit is $63,400. Now your CPA takes it from here because they're going to do stuff like with the Social Security payment that you have to make, and you can deduct some of that. Also, self-employed from your net profit, I should say. And then your tax bracket may vary depending on if you take the standard deduction or all those things. But in reality, you're going to figure to pay with California, we have pretty high state taxes. And I would say between your federal taxes and your state taxes, you're somewhere around $7,000 a year, roughly, off of that net profit of $63,400, which is about $135 a week if you want to break it down weekly. So your income taxes for your business is about $135 a week for 45 pools, bringing in $100,000 a year. Even with that tax burden, because if you work for somebody, you're going to pay taxes anyway. You can't escape that. I would say that the profitability of the pool service business is really unmatched out there by any service business, in my opinion, and is something that requires very little startup cost. And as you can see by the amount of money you're making with even just the basic deductions, you're really very profitable even after paying your income taxes, your federal and state. And the Pool Guy Podcast Show has teamed up with UPA to bring you affordable, reliable liability insurance starting at just $64 a month. Get up to $2 million in coverage, and the members of my coaching group get an even lower rate. Protect your business and your peace of mind. Sign up with UPA today by clicking the link in the podcast description. And I wouldn't throw all of the mileage deduction back in as kind of income, because you are paying for gas and maintenance if you're not going to take the expense route. And so there are costs involved in that, but you can throw a pretty good chunk of that mileage deduction back into your net. And let's just say then if you were going to do all the subtraction here and then the addition of some profit back in from some expenses that you can kind of put back in as net income, because you're not going to use all of that. But let's just say, again, the $63,400, and then I'm going to minus $7,000 from that for your taxes. That's $56,400. So $56,400. And let's just throw a third of the mileage write-off back into that. So let's just put $3,000 back on, and then with $3,000, that's $59,400 divided by 12. That's about $4,950 a month, close to $5,000 a month. Net income after all of your expenses, your supplies, all the costs of operations, and then your tax burden. And by the way, you should be paying quarterly taxes so you don't get penalized on that. And so doing 45 pools a week will bring in about $5,000. Now, this is not anything that you can take home and say it's 100% accurate, but I think it falls within a reasonable level of accuracy with the income based on the averages out here and how much money you can actually take home after everything with the pool service business, working really just 4 days a week and part-time at 45 pools. That would be roughly 11 pools a day, Monday through Thursday, with Fridays off, or working Friday, having Mondays off. 11 pools would take you probably, if you start at 8 o'clock, you'd be done by noon, 1 o'clock every day. And to me, that's what I consider a part-time job, and it brings in pretty substantial amount of money. Now, of course, you can double that by doubling the size of your route, and then you would double your income. You would double your expenses and everything and your tax burden, but of course, your income would go up as well. If you just wanted to add 10 more pools to that, you would actually bring in a lot more income as well. And I know in a perfect world, this example would show that everyone's reporting all the money they make, but according to the latest data from the IRS, there's about $539 billion in underreported income, and a lot of that, of course, is in the service industry, where a lot of the income is just not reported on the taxes. And it's, very difficult, I think, for the IRS to track everyone down. And again, I mentioned that sole proprietors, they're the ones that they actually single out for audits under Schedule C. And it seems like if you incorporate, you probably have a better chance of not being audited. Even if you don't fudge on your taxes, that's not going to be an issue for you. I think there are a lot of reasons why you shouldn't underreport your taxes. A lot of that has to do with potential for investing later. If you underreport your income and you don't report all your earnings, you don't get credit for that, of course. And if you wanted to buy, let's say, an investment property or something of that sort, you would need to have your income verified. Although there are DSCR loans now where the loan is based on the rental income of the property and not on your income taxes. So that is not a completely valid point, and is something that a lot of investors are not even using their income taxes when they purchase an investment property nowadays. And also there are other things like Social Security. If you don't report your income, you're going to draw less Social Security later on, because that's based on the income you reported on your taxes. So there are some reasons. Of course, you'll sleep better at night if you report your income. And with the amount of deductions you're able to take anyway, it really doesn't make a lot of sense not to try to keep accurate books and report your income as it comes in, with the deductions, of course, lowering your total taxable income down, or your net income or your net gross income. This is one reason why I recommend a good CPA, because they can find ways to save you money. They can give you ideas. If you're going to buy a new truck, they can help you maximize those deductions on the following year's taxes. Maybe they'll advise you to bring your spouse on as an employee. Even though you pay double taxes, it might be worth it in that case. Or your CPA may recommend getting an employee, hiring somebody, giving them some accounts, and then using that on your taxes as a deduction as well. You'll be making more money because you'll have an employee out there. Plus, you can deduct the expenses associated with that. And I think it's not a bad idea to try to find a CPA that specializes in self-employed small businesses that can really advise you on your best strategy, vehicle expenses or the mileage deduction. What deductions are something that you can take? Like, for instance, you could take a home office deduction on your taxes, but you got to be careful because a lot of people get audited with their home office deduction. But you can deduct a portion of your utility bills for that in that case. If you can prove that you use your home office, of course, a percentage of time for your business. And these are all things that, of course, you would talk to a professional about. I was just trying to give you kind of a mock idea of a typical service business and what to expect as far as profitability. And you can see with a small amount of pools, with a good service, weekly service rate or monthly service rate, I should say, with just the typical expenses, you can do pretty well out there. And it's something to consider when you start your small business. How much profit is actually in that business? How much can you actually make? How much are the expenses? And what is the total amount of profit? And with pool service, I think one aspect that kind of trumps a lot of different businesses is the fact that it's scalable. You can do the same amount of work, same amount of hours, bring on an employee or two, scale your business to where you're double or triple the amount of money you're making, but still working the same amount of hours. And then you would still be extremely profitable because, again, the more you expand, the more supplies and costs that are involved, the more deductions you have on the income that you're bringing in as well. So it's all relative based on the fact how much money you're bringing in, how much are your expenses that you're writing off, and how much you're netting. But it's one of those industries where you can scale it to a point where you can be bringing in 2 times, 3 times, 4 times your income while still working the same amount of hours each week. If you're looking for other podcasts, you can find those on my website. If you go to the banner, swimmingpoollearning.com is the site. If you click on the podcast icon on the banner, there'll be over 1,800 or close to that podcast you can bring down and listen to at your leisure. And if you're looking for my coaching program, you can learn more about that at poolguycoaching.com. Thanks for listening to this podcast. Have a great rest of your week, and God bless. This episode is brought to you by Hasa, providing products that deliver clean, healthy water for every aspect of everyday life. The bottom feeder battery-powered vacuum system, portable, powerful, and only weighs 12 pounds. And Skimmer. Get Skimmer, America's #1 pool service software. Podcast listeners can try Skimmer for free at getskimmer.com/poolguy.